to Vegas.
This is real world-class money-making business.
What's the count?
+9.
+5. +13.
Dude, I lost count 20 cards ago.
Don't call me.
Which is all about a key Forex trading mistake that beginners make. And it's a very easy mistake to overcome if you know what it is, how to deal with it, and its potential impact if you don't. And it's the random distribution of profit and loss in Forex trades. I'm just going to go through it, how to avoid it and how to achieve long-term success. Kicked off the video with a short clip there of the MIT blackjack team making a killing in Las Vegas, millions of dollars by card counting. And it's a great film, you should go and watch it. Why have I put it in the video? Because in blackjack, to win, you need to understand random distribution of profit and loss, and the best blackjack players do. And many have come to the Forex markets and become millionaires because of their understanding of it. And it is a key to success, overcoming random distribution of profit and loss. So what is it? Basically, let's say your strategy makes 50% winning trades and has 50% losers, which is a highly respectable hit rate. Now, that will be over the longer term. In the short term, anything can happen. So let's say, for example, you might get 5 winners, 1 loser, 1 winner, then 10 losers, then 3 winners, then 10 losers. Now, in the short term, the profits and losses can be random. But there's one surefire thing that's going to happen to any Forex trader. You're going to hit a string of losing trades, and you actually have to deal with it, ride it out, and keep your losses small. Now, most traders simply cannot do this. They're unprepared for it and the emotional impact. And also many traders, particularly beginners, come to the market with the idea they're going to win the majority of their trades. They're not really going to have any drawdown. It's the hype put around online by the marketers and people who've never traded. So never believe it. You're going to hit a period of losses with any strategy, even the best traders do. So how do you deal with it? Well, the reason most traders are unable to deal with it is because they're either just trading off their gut instinct, they don't really have a strategy they're confident in, or they're following others, they bought a robot, or they're following trading signals. You'll never ever stick with someone else's system through a losing period, simply because you don't know how and why it works and why it will eventually recover to profit. So the first lesson to learn is to research any strategy, even if you are following someone else, exactly how and why it works and why it's got a trading edge longer term. This will give you the confidence to basically follow it through short term losses. And one thing you've got to keep in mind is once you start to lose confidence in a strategy, this is what happens to a lot of traders, they'll start to change stop orders, put them further back, hope that the trade turns around, or they'll override entry signals. There's no strategy then at all then, is there? Because you've deviated from it. So you're just really trading via your emotions. You've really got to avoid doing that. You've got to stick with a strategy. Also, don't be tempted all the time to chop and change strategies. There's no perfect strategy. Any strategy will have a losing run, and you just actually have to ride it out. In terms of riding it out, you have to stick to the system. And one of the easiest ways to make a drawdown period easier to cope with is to cut your position size down until you come off the drawdown. So don't be in too much of a hurry to get back to profit. You see a lot of people who keep the same position size or make the fatal mistake of increasing it to get their losses back quicker. The market isn't going to help you do that. It's probably going to take money even quicker. So basically stick to your system, cut your position size and wait to come off the drawdown. Now, in terms of Forex trading success, it isn't about how you deal with your winning trades so much as how you deal with your losing trades that leads you to success. I always maintain that the winners tend to take care of themselves. There's no emotional impact when you're winning. You just basically follow the system. When you're losing, it's a blow to the ego. It's these periods you have to deal with. All the great traders will stress this point. It's how you deal with your losses that counts. So I think if you come into Forex trading and you're serious about making money, make sure you research a strategy and make sure you're fully confident in it, know its trading edge, why it's going to win longer term. And just take those losing periods in your stride. Stick to your plan, cut your position size, be patient, and wait till you get back to profit. Forex trading is a long-term game. Now, in terms of random distribution of profit and loss, you will have chart setups that look fantastic, just as the blackjack card counter will think, you know, the cards coming out the deck are fantastic for him. But there's no certainties. It's an odds game. So even the best chart setup can be ruined by the market. And I think, you know, in Forex trading, you know, the real key, and, you know, it's stressed a lot, but it can't be overstated. Money management is the key to success. Keeping those losses small and basically holding your discipline and basically trading your strategy as it should be traded to make sure you make those great long-term profits. It doesn't matter losing in the short term, as long as you win in the long term, that's all that counts. So thank you for watching this short video. Take care and have a good day.